Oh, hello, hello, and a massive hello to everybody. How we all doing? Rocking and rolling in a free world. Hope everybody's having a great weekend wherever you may be, whatever you may be doing. This is 50 pips. Here we go on the 2nd of April, 2017. No trade calls and recommendations. Everyone responsible for their own stuff. We're here for educational purpose only. April already. My God, my God, my God. Time is flying by very, very quickly. I don't know if it's you need to be happy because we're hitting spring, or depressed because it's going back by so quickly. So let's see what's happening. I mean, a fairly interesting week. There's a lot of data points throughout the whole week. An RBA on deck with a rate statement rate on Tuesday. GDT, fairly ISM, ADP, those FOMC minutes, but really it's all about the end of the week on Friday when we got non-farm payrolls, right? Because that's going to be the big thing that's going to potentially influence the way the market is pricing things. And basically, it's all about the USD, right? So what's happening here on these charts? Not too inspiring, but there are some things going on. So yes, on equities, it's pretty much the same thing. We talked about that. What we were focused on was, have we put in a swing high, right? Have we put in some kind of a swing high, and are we going to see a nice little retracement off these highs, right? And the point was, if this is the high that's put in, right, we're going to end up going into the end of the month, and we're going to put in a negative close on that March monthly candle, right? So let's go back on the monthly. Widen this out a little bit if the software wants to cooperate, and you see indeed we put in a negative close. So it doesn't mean that market has to puke, right? All it means is that it's struggling a little bit at highs, right? And if we look at it on the weekly, what is it telling us? Well, it does look like it's a little bit coiled, and it might need to test higher, right? So let's just go back to the daily. We don't pay too much attention to the bigger time frames, but we think they're interesting in terms of providing context. And since we were talking about the monthly close, I wanted to review that. So here our assumption was that after this nice little correction and the market was behaving fairly healthy manner, we got the bounce of the first moving average, so the 50. So it would be normal, or at least it would be healthy, to catch some kind of a bounce, right? Now, even though structurally the key level for the bears to hold is going to be this high, right? If this was going to be, let's say, a pretty picture, right, you'd expect this bounce off the 50 to potentially come back right into this descending trend line, sell off from here, and then continue the next leg lower, right? So what you would look at if you're looking for this to play out perfectly is to see a little press up this week, maybe open, stall a little bit, press a little bit higher, and then fail from a higher level, right? We're not too bothered about the chart looking pretty. The way we look at it is the shorts have made their beds, and they're going to stay in this looking for this to roll, and the buy the dip crowd have bought this, and they're going to be looking for this to make new highs. So inside this area is a lot of chop, a lot of velocity inside range, and it won't necessarily mean too much to us unless we get daily closes outside these extremes. And you see a fairly, same thing in equities across the board, except for basically on the NQ, where we did print new highs, but then we failed to hold them, right? So that's pretty much what's going on. And in terms of, where is the tell? As we've been talking about this for a long time, the tell is probably going to come from gold or from the ZBs, from the bonds, right? If we haven't already had that tell, right? So we're looking for these ZBs to correct higher. And you see, even though they're not getting traction at these highs, they are holding bids. So you want to watch this, especially into the end of the week, into that non-farm payrolls, right? It's all a dollar play, right? So are we going to pop, or are we going to retrace, right? And likely market's going to do the inverse, right? And it's the same thing if you're looking at gold. What's happening on gold? We looked at these longs here, and we said, into this 200, into these failures, you need to take profit, right? Because you'd expect this to correct down a little bit, but it's stubbornly bid, right? Despite the double failure here, where you would have expected more follow through to the downside, it's still stubbornly bid. So it doesn't change the fact that there's an awful lot of chop here. But again, all things being equal, if equities are going to continue higher, etc., and the market really believes the move, then you would expect gold to come right back down into these moving averages and find some kind of support, right? So even if you see equities continue to drift higher or hover at highs, but you see that gold continues to catch a bid and starts to break higher, you see 30-year, so the bonds continue to catch a bid and break higher, then you'd have to say what, either the bonds and gold are lying, or the stocks are lying. So if you have both gold and ZBs continue to press higher, I know which one I believe, right? And it's definitely not equities higher. Again, it doesn't mean it can't. And even if you look at the volumes on NASDAQ on that press higher is far from inspiring, right? The other, and that leads us to, in terms of the dollar index, there's an awful lot of chop on the currency side, and I think it's far from clear, or at least as clear as mud. Here we saw this, when we pressed lower, everybody's getting very excited. We said we wouldn't be surprised if this was the low on the dollar index, and we're going to retrace and try and tag that 100. Now we saw a little bit more strength than we thought we were going to see, but all things being equal, you see how it's just moving back to that resistance zone, those two moving averages. So it's extremely healthy, right? It's the opposite what we're looking at gold and some of the other charts. It tags the lonely moving average and it comes back into the other two, right? So all things being equal, it's still it's still holding well. A lot of people are going to be talking about the bullish monthly or the bullish weekly. The way we're looking at this is, again, we're kind of stuck and there's an awful lot of chop here, and we wouldn't be surprised to see more chop before we decide which way we're going to break. And most likely we think that Friday is going to be interesting in terms of data, but we think there hasn't been, or there needs to be a stronger catalyst in the market to see a very, very strong move or a very strong break. And that's highlighted in a lot of choppy action in some of the other majors. I mean, the interesting thing last week is crude, right? We've been talking about crude for a couple of weeks, and we said it really looked like it was trying to eke out some kind of a bottom and rip up off these moving averages on the weekly, right? And it was sloppy, but we got a very decent move, right? Fairly tight risk below this for a move back into this breakdown zone. So it's quite nice risk reward, but we think here the velocity of move is done. Now, again, if you look at the bigger time frames, if you look at this, everything is pointing to crude wanting to break higher and try and take out that 55. For some reason, we're always very suspicious of these OPEC-led rallies, so we wouldn't be too hot trying to buy this aggressively. And you see here, again, choppy area. We've got these two moving averages. We're back inside this breakdown zone. So we'll be watching this very, very carefully, but in the same way that we had no problem trying to play tactically long into these lows, our focus this week is going to be to try and find some opportunities to play tactically short into this breakdown zone, okay? And if you look at CAD, right, reflection on crude, it's extremely choppy. I mean, if you look at the monthly, the only real conclusion you could make here is this is looking heavy and you probably got a little bit more downside, right? If you look at the weekly also, it's not, it looks like there may be a little bit more downside here, right? But we just don't, for some reason, we just don't trust these moves, right? So I'll give you the technical view, and then we don't really trusting them. So it doesn't mean it can't break lower, but you see when we've got all this chop, we feel it would be very foolish to underestimate the importance of this support. So no matter how good the shorts look, we do not like getting pressing the accelerator into a brick wall. So if we had to short, we want to see some kind of a short at a higher level. Here, if anything, we're looking for some tactical long opportunities, right? And the other thing a lot of people have been asking about, well, is GPB, and then Adam was asking about Euro GPB. I really don't find it interesting, but paying it forward, I'll review it for Adam too. We'll look at Euro GPB here. And again, nothing much has changed on this cable, right? We said the risk is clearly for this trying to be putting in some kind of bottom. The risk is in terms of squeeze as everybody's positioned short, is to get more upside, but we feel that that would all be pricing in that everything's perfect with Brexit and everything's certain. So we would be very, very cautious about getting long here, even though we understand there's a clear risk of a squeeze, right? I saw some people talking about, squeezes back into the 138, 140. Not something we would even think about at this moment in time. It can happen. Stranger things have happened, but it's not something we would be entertaining. Here, nothing much has changed for us, right? This 126 is that sell zone we talked about many times, which very nice risk reward for a move back into the 1650s, right? And you see how the market seems to be protecting that area. Daily close above, we expect this rotation to complete back into the 128. As long as we close below, then we think there's chance for some kind of surprise to let this come try and test back inside to the 121.50. But we don't think it's particularly interesting here. There's a lot of event risk here, known unknowns, and unknown unknowns. So we'll have to see what happens. But it's still choppy, and especially when you see price hovering behind, these 50 and the 100 and the 200 on the daily, we like to look at it as a bigger chop zone, right? And if you translate that into Euro GPB, for us it's very similar to what we were saying on dollar Canada, right? So if you look at this on the monthly, right, it would be very hard to say that this action on the monthly looks bullish, right? The only thing you could say here, it looks like there's some more downside. If you look at this on the weekly, right, the only thing you could say is, this looks heavy. It probably wants to try and clip these lows, right? And if you look at it on the daily, it's still looking a little bit heavy. Now, what I would suspect is this to try and get a little bit of traction to the downside. If it can, on any pop, you'll likely see plenty of shorts wanting to sell back into the confluence zone of all these moving averages and this breakdown zone, this descending trend line, right? You've got a lot of weight. So you probably see a lot of sellers trying to come in here. The only thing I'd like to say is just be cautious, because this level's held for a while. If you look at it on the weekly, right, you've got this moving average coming into support into the trend line. I just don't think the areas offer compelling risk reward on either side, because even if you're getting short on some kind of pop, you probably have to stay a little bit wide. And if you're trying to get long here, you probably have to stay a little bit wide. So if anything, on a puke lower, maybe it might be interesting to the contrarian play to try and play some upside. But again, I don't think any of the charts are particularly interesting. So I wish I could be more useful, but that's the way we're seeing things, is always just trying to pay it forward. And again, thank you so much for liking, thank you so much for sharing, thank you for all the comments, and wishing you a great rest of the day, an awesome weekend, and let's see if we get some action. Hopefully next Sunday video is going to be a lot more interesting. As usual, I'll try and keep on doing those Wednesday morning updates. Subscribe to the blog, you'll get an email with a link to it 10-15 minutes before it starts. Have an awesome one. Thank you. Bye-bye.